Hi, good morning. This is Hyperwave. We are going to have a quick show. Sorry, we weren't able to get to the Bitcoin price last night. We were running a little late, and then with the tech difficulties, but we won't let that happen again. So, all right, before Thor tries to take over the show, we're going to have a brief look at Bitcoin. We're going to start doing this every weekday and hopefully sometimes on the weekend. So it should be 15-20 minutes, and every morning you guys will get to know Tyler's thoughts on what's happening with the Bitcoin price action. So with that said, Ty. Oh no, Ty, your mic already isn't working. It's not working. Okay, you guys have me. I guess for a little bit. Maybe I'll pull up TradingView for you guys while we have while Tyler's off. I actually do not have the live chat up right now. I will be completely honest. I will pull it up in a second, but I had to see the surgeon this morning. And Ty is getting back on. So let's pull up Bitcoin and see what's going on here. All right. And yes, you have Thor being a bit obnoxious in the background. So, all right. Let us see. Screen share. Ty.
How's that?
Oh, good. I was just about to bring up the chart, but let's have you bring up yours. All right, Ty.
Okay. Can you take that one down?
Yep. Here you go. You're on.
Okay, great. All righty. We're going to just look at two charts, go through them very quickly as we do about 6 or 7 different indicators. But I'm starting with this long-term chart where I have the two parallel lines that we haven't talked about for a long time. One of them is at 10,100. The other one is at 11,100. And they are important for a number of reasons that we'll get into a little bit later. But let's just start with where we are right now. This is the upside of the hyperwave. This is the downside of the hyperwave. As long as we're above both of those lines that I call the valley of death, that is a good thing. If we are below those lines, that is a bad thing. And let me show you why. We're going to start with the stop and reverse points. And clearly from the top, we have been in a downtrend ever since. And to get above this point, we have to go above 9,400, at which point I will rethink several things. But we're nowhere near that at this moment. We'll go to the 3-day, and you see the 3-day has changed once, where we had a small uptrend from the bottom at 6,000 to the top at 10,000, and then we've gone back into a downtrend according to the SARs. To get above this 3-day SAR, we have to get above 8,934. Let's take a look at the daily. The daily switches back and forth, as you can see, but it is picking up all of the long-term downtrends, all of the intermediate-term uptrends with little whipsaws in between. We are in one of those whipsaws right now, and if we go lower than 7,190, we will return to the downtrend on the 1-day based on the stop and reverse points. Here is the 12-hour. The 12-hour has been basically down from the 10,000 top until recently, when we ran from 7,000 up to this high point, which was 77.90. And now we have re-entered a downtrend by breaking below the stop and reverse point. 4 periods of 12 hours each, or the last 2 days we've been in a downtrend. I have not switched my short term from neutral to negative at this point, but I am close to doing that, and I'm going to explain that one more time at the end of this program. Here is the 6 hour. We are in a downtrend after the pop again from 7,000 up to the 7,800 level. Couldn't make it back to 8,000, and now we are heading down again. The 4 hour, same thing. The 2 hour, same thing. The 1 hour, same thing. We did get a brief bounce in the 1 hour chart overnight, but it gave it back, and now we're back in a downtrend. To get out of the 1 hour, we need to get back above 7,450. Okay, so let's take that off. Stop and reverse is negative on all time periods. Let's take a look at the moving averages. Starting with the weekly, we are back below the shorter term moving average, and the shorter term moving average is moving down. We had the death cross back on March the 25th, and it has remained ever since. We are flattening out on the longer term. You've probably heard Tone say in the show that we did together a couple of days ago that we are still factoring in these high prices into this. And as soon as we go sideways a little more, that longer term is going to begin to drop. But this is a negative on the moving averages. This is the 3-day. We are below both of them, and they are both moving down. That is the definition of a bear market. On the 1 day, we were slightly above the shorter term for the last 5 out of 7 days. We are now back below it, and it is rolling over. It is not going down yet, but the longer term is moving down. That is negative. The 12 hour, we got a little bit of a cross, which would be considered a golden cross, but that is quickly coming down. And at this point, I would give the 12 hour a neutral until we actually cross back below the shorter term, crossing back below the longer term. That will happen in the next 24 hours, unless we get a big spike. The 6 hour, we have just crossed back below. The short term coming back below for a secondary death cross. And we'll just take it one more to the 1 hour. The 1 hour has just moved up to 74.54. This little pop has taken us back above the short-term moving average, and now we've got to get above 74.71 in order to get back above the longer-term moving average. Okay, let's take those off, and let's look at the Bollinger Bands on the weekly basis. As we have been saying, this is very negative because we have been attempting for weeks now to get back above this middle line. The middle line has turned down. The top line is falling rapidly. The shorter term line is still coming up. And that's good because that means we only need to get to about 6,280, 6,039, I'm sorry, 6,039 to reach that line. Back down here, that line was at 400. It's now at 6,000. But in order to invalidate the sell signal on this weekly chart on Bollinger, in my interpretation, we need to get either above the midline, which it tried to do at 10,000 and failed, or we need to close out this move by dropping below the lower line on a closing basis. On the 3-day chart, the same thing. We did get back above the middle line, barely touched the top line. Now we've gone back below the middle line. We still have not closed below the lower line. The lower line on the 3-day comes in at 6,700. On the 1-day, you can see what happens when we bounce up to that middle line. It becomes a very heavy over resistance, and we rejected it one more time. To get back to resetting this, we need to drop below 6,900. And on the 12-hour, we did get back above the midline, couldn't get above the top line, came back down, tried to hold the midline. Now we've dropped back below it again. And here we actually did close below that line, but then we came back through the middle and all the way back up to the top. So that reset it, and now we've got to get back to 71.67 on the 12-hour. Let's take that off and move to the RSI. The RSI, as I've been saying on the weekly basis, in my interpretation of long-term moves, needs to get oversold. We are attempting to do that now, but we're still at 45. We need to drop down to 30. We had this bounce that took us slightly back above 50 on this move up in price from the 6,000 level to the 10,000 level. But that got rejected. We have now come back down, and I believe we will need to drop down to the 30 level on the weekly basis before this becomes oversold and we have a chance for a bounce. I'm going to just go quickly. Here is the daily. Never quite got oversold, got down to 32, 31, bounced back up to 45. Now it's coming back down. Was not oversold back here. So from a relative strength point of view, my interpretation is that the longer terms are still negative. Some of the shorter terms did get oversold. This is the 1 hour. The 1 hour got oversold and is bouncing. It was oversold briefly back here, and then it bounced. But back at this top, it got overbought again on the 1 hour. And since it got overbought, it's come all the way back down again. Now it is attempting to bounce right now. We'll just have to follow it throughout the day. But overall, I'm giving the RSI negative on all longer time periods. Here is the MACD on a weekly basis. We have been negative since we crossed below these parallel lines, and we remain negative now. The histogram was getting stronger, meaning less weak, but has rolled back over, and you can see this third one back is lower than the previous three. And now we are struggling with this movement to not turn down. So on a weekly basis, the MACD is negative. On the daily basis, we have just turned positive 3 days ago with this move up. And it's barely, but it is positive after many days of negative off that 10,000 top. So we'll see how this develops. And one of the reasons I've been saying I'm neutral in the short term is because so many of these indicators are attempting to make some kind of a move off of here. But up to this point, they haven't been able to do that. So all in all, I believe the RSI, the MACD, the stop and reverse points, the Bollinger Bands, and the moving averages are all pointing on the intermediate and long term to lower prices. I said I would make a comment about the my short-term calls, and one thing I wanted to do, and you can do the same thing that I'm about to do by just going back into my tweets over the last 3 or 4 months. One of the great things about Twitter is you've got the full record of what somebody has said, that you can go back and look at the day and even the hour when a tweet came out. That's particularly helpful if you're doing analytics in the marketplace where somebody is making statements about what they believe is going to happen. The historical record of what the price has done since the top at 19,666, you can go back and look at each of the tweets that I've made and line it up with various points. I want to talk about one in particular, which is back here in early March. This top is March 2nd and March 3rd. And I'm going to read you a couple of tweets from those dates because I was beginning to get very bullish after these moves, because it looked like we were going to be able to break back up, break the downtrend from this top, and possibly go to new highs. At the same time, we had not yet violated my phase 3 hyperwave line when this was occurring. So I was hoping that this test of the hyperwave phase 3 line was going to hold and we were going to be able to go up to new highs. So this is a very important point. Going back very briefly to those lines that I drew on this chart, notice that the period that we are going to talk about now is right here. After dropping to these lows, we tried to get back above the 10,100 level. We struggled for 4 weeks. We were able to do it. And then on this week, we closed above the 11,100. We had not yet taken out the phase 3 hyperwave line. And so now I want to take a look at why that is such an important level. This is the Fibonacci lines with 19,666 being where I'm measuring the retracement. And the retracement, you will notice, this is the 50% retracement line, which happens to be very close to the lines that I drew on the other chart at 10,100. The 50% retracement is at 10,177. Between the two lines, 10,100 and 11,100 on that previous chart. So what I was looking for is this bounce above the 10,100. It failed. We dropped back below it. We went back above it. And now I'm going to read you the 2 tweets right on these days, on the 2nd and the 3rd of March of this year. And I'll keep the pointer right there. And I'm going to blow this up because remember, I was getting very, very bullish at this point. This date is March the 4th. This is March the 3rd, March the 4th, March the 3rd. I'm going to go to a daily chart that will make it easier. March the 4th, and March the 3rd. So on March the 3rd, I had my previous posts off of this bottom were saying that this is looking more and more like we're going to be able to break out. And here's what I said on March the 3rd. A little nervous. The bull wagon is getting a little crowded. Many analysts making similar observations. Major trend line break, head and shoulders, cup and handle, favorable Elliott wave count, favorable sequential count, similar upside targets. And then I said, are we missing something? A little bit later, I tweeted, this group think is based on sound analysis, but are we missing something? Proceed cautiously, one step at a time, think and observe. The very next day we topped out, dropped back below 11,100, back below 10,100, and we've been going down ever since and have never revisited those highs. We recently came up to 10,000, couldn't get above 10,100, and now we're down here again. Now, why am I saying that? Number one, you can do that same analysis on any one of these candles, pick out a day, go back into the tweets and see what was being said by me in terms of the analytics that I'm using today to talk about where we are and where we're going. I get very nervous when everyone else is getting either very bearish in a downtrend or very bullish in an uptrend. And I'm saying that not about Bitcoin at this point, because still most of the people that are making comments from that 10,000 top down to where we are still very bullish and don't believe the numbers that Tone Vase and Van Zen and myself have been talking about in terms of dropping down below 6,000 down to the 4,900 level and maybe as low as 1,000 or in Tone's case 1,300. So I don't feel like we are anywhere near being in the majority of analysts using various tools. That makes me more comfortable because of what I just said about how everybody seemed at the top at 10,170 or so to be absolutely sure that we were breaking out. So you're going to hear me become skeptical at various points if everybody else is taking the same basic position. Not that I'm trying to be a contrarian, just that my experience tells me that when everybody moves from the center of the boat with half on the right side of the boat and half on the left side of the boat is very stable. When some people begin moving from the right back to the center or the left, the boat begins to tip. And the more it tips, the more unstable it gets. So I just get very nervous when everybody is on the same rail, either the port or the starboard. It's much better to be balanced out because something is probably about to happen unexpected when everybody's on the same page. Now, that final comment, and then we will end, is based on the fact that I'm beginning to see that almost everyone has turned bullish on the stock market. Almost all the analysts that were nervous during the last 4 months have sort of thrown in the towel. And I have too. As you know, I believe that the stock market is signaling higher prices. But you're going to see me start tweeting, are we missing something? And I'm going to start looking and really analyzing my own thinking in terms of where the U.S. stock market is right now. Only because my sense is that we now have too many people on the bullish side of that trade. and I need to think that through. So with that, I am going to get off of screen share and go back to Leah. And we ran a little bit over, but we did it fairly quickly. Thank you very much.
All right, everybody. Whoa, there's feedback. Sorry. Everyone have a great day. I'll end it right there and maybe see you guys in the morning brief in a little bit. But thanks for watching. Bye.